All right, folks, welcome back. It's been such a long time since I posted here on YouTube, and that has been because I've been really busy with my students and I've been really private and working closely with my students and my partners. But today I'm opening this because I felt like, okay, it's been a long time. Let's put up something here. Um, this is gold. I've got gold right here, and I'm going to go to the 1 hour time frame. At the end of this video, you're going to watch and see real life or real time execution of this particular trade or this particular asset. What we have here is a market that is preparing to trade higher or to seek higher prices. And we saw that move really long, really, uh, really long move right here. And it happened with so much velocity and price the market is not done with that. Okay. We're still going to see price movements to the upside. So basically what this is going to do is just to give you some tips, which I think would really help your trading going forward. First of all, you really want to ask yourself, where has the market traded to over the last 2 days, and where has it traded to over the last 2 days or 3 days with so much velocity, okay, or over the last 24 hours with so much velocity. And if you look at this, well, the market has moved, traded downwards. Uh, First of all, the very first right here, we call this an impulse. The market returned into that. We had an accumulation right there. It returned into that, and then more. It traded lower with more velocity. So these are the questions you really want to ask yourself, because when the market moves slowly against velocity of the previous day or the previous whatever or the previous week, then you can tell that we're still going to see price movements continuing in that direction where the velocity, where we saw price moved with velocity. So you see this, it moved back in here, not so much velocity, but because we see this kind of choppy price action. Price moved up into the sensitive zone, and that would have been a very high price. And then boom, it traded lower again. So much velocity, so much speed. Look at the volume right here, the candles, okay? The bearish candles here, and they were really fast. And then we start to see really fast movement to the upside. And this time it took out this high, okay? And at the same level with the previous level of accumulation. And then you're seeing the same behavior right here. Now look at this velocity, really fast move. And we're going to see the opposite of what I just explained happening here. We're going to see it here. Price is going to trade lower with very shaky or very shabby price action, trading back in here to give us more velocity to the upside. And this is what we're going to see in or at the end of this video. And where are we going to be targeted? We're going to be targeting this high. I'm going to mark that here. We're going to be targeting this right here. That's the high right there. We're going to be targeting that high. I'm going to change the color and I'll change that color to a darker one. All right. So we're going to see price trading all the way up here. That's somewhere the market will trade to. So right here, I'm going to put a flag. And let's reduce this. We're going to see price trading upon trading in here. But the question now is, why here? A lot of folks are going to be, well, it's a demand zone. Well, but that's not the real definition, okay? And why here? Because we have institutional orders that are going to be picked up right here. So institutional orders are going to be picked up right here, and that's the reason why. So it's going to be a place for real institutional buying, okay? And price is going to trade higher. If you want to know more about that, you can send a message to my email, and I'll get back to you, and you get to learn more about this. And you're going to see a trade engineered from here and bullishness engineered from here all the way back up into 1724.07. But we must see price trade in here. And this can be filtered or stream or fine-tuned into the 15-minute or lower time frame right here. Want to see price take out this area, okay, because we have retail short here, retail longs. Price is going to trade lower and take it away from everybody and trade higher. Now you're going to see a trade with very low drawdown. We're going to frame a trade with very low drawdown. At the end of this video, you're going to see that happen. Very low drawdown, taking out this high and trading all the way to target this, all the way to this price level. And let's check how many pips that would cover. How many pips would that be if we took from here, right there, 168 pips? And what about here? And let's, that would be 130 pips. So we've got 38 pips difference between these two levels. So we want to see price trade back in here, and boom, our trade is going to get set for at this price level. I'm going to mark that. This is where our entry price is going to be around here. Uh, 1707.25 and all the way up for 130 plus pips. If we're going to go for the higher price, then we could get up to 168 pips. So here's the entry, or here's the target. And all the way up. And our stop is just going to be below. So this is a 168 pips, and we're going to be doing a 5 to 17, okay, risk reward ratio. So we could actually move this into a lower time frame and pick up more precision and reduce the stop, okay, and get a much lower stop. But for the purpose of the fact that this particular asset is very volatile, we're going to leave the stop right here. We're going to leave it right here. So our stop is at 32 pips for 169 pips, okay? Right here. We don't expect the price to trade into this level. So, but let's, for the purpose of this, let's just go to the 5-minute time frame and see if we could make this a little bit more, So right here, you can see our entry could still be taking, we could get the entry here, okay? I'm gonna move this so we get a more precise entry on the lower time frame with a shorter stop. Our entry is going to be at the second half of this, the border right here, and our stop just here. Okay, the second border of this particular line we have right here, and we're going to be risking 25 pips instead of 34 for the same target. okay, for the same target. And you see that? So that's going to be it. And we're going to be waiting for price to trade lower in here and to take off into this price level. And at the end of this video, you're going to see the live execution of this particular trade with very low drawdown. So stay with. All right, folks, welcome back. And we're back here and we're looking at gold again. And I promised earlier that we were going to do, we're going to see a live execution of this, but we missed the entry. We missed the entry by a few pips. Let's go back to the 15-minute time frame where we framed this particular trade. So we missed the entry, and so for that reason, we're not going to have that live execution video like I promised. So here, this was the entry. This was supposed to be entry. One of these two box, any of these two box. The very first time it was this very first price level at the very first border line, and that was right here. But price failed to hit that price level. Okay, for the purpose of precision, we used that level, and it failed to move. You know, this is very volatile, so it failed to move 8 pips down to have us filled. And the market price traded higher. I want you to look at that price level that I told you was going to be the target. And boom, it went all the way in there and just a little bit to the exact target, just a few pips shy. So you can see we were a few pips shy here at the entry. So we didn't get filled. We were a few pips shy to the final target that I was talking about, and we didn't hit that target. But if we were to trade this normally, we would have been in at a higher price. But for the purpose of precision, we had to take a lower price, okay? And that didn't get filled. And these are some of the things that you would have to face, as a trader. These are some of the things that you'd have to face trading Forex or trading the markets. And it's normal. Let's see how many pips this covered. This covered 160 pips, okay, from this particular level all the way up here was 160 pips. The very first outline was 169. So give and take, we missed that 7 pips or 8 pips down here, and that was what happened. And so there are ways you can actually do this and get really, really tight stop losses, and basically you want to call that a sniper entry. There are ways to do this and get that precision, sometimes 2 pips or 3 pips or even 4 pips drawdown before price moves in your direction. If you have questions about this, hit me up. You've got my email right there, and I will answer you as soon as I can. And that's going to be it for today. And as time goes on, I'll do my best. I'll do my best to make sure that we have more of these live execution videos right here. For the purpose of YouTube, I cannot go ahead to talk about all the mechanisms that brings or that leads to this engineering of price this way. I cannot talk about that. Time will fail me here in order to do so. But if you have any questions, you can reach me at my email, and I'll respond as soon as I can. So that's going to be it for today, and I'll see you guys later.